Okay, good morning all. Good morning all. Hey, great to see all of you. So support is with us too as well. He'll answer as many questions as he can, but of course we will answer it as well over here as well. So let us take a look at today's focus. Well, you can see that we did drift lower yesterday, but we're still within a range where the supply and demand is not out of balance. So meaning we've traded the area that we've been in for a while, and we haven't taken it out either way. So if we go take a look at it on the charts, we're still above the 240 demand on the NASDAQ. And, so it's still within that whole upper range. Markets are waiting this week for economic data, and you can see for today it's going to be ADP and ISM manufacturing PMI. It's a mystery support. Okay, let's take a look at the next area. So yesterday we had our NASDAQ set up. Was any of you willing to take this area? Did you get in on it? It was 2 5-minute levels on top of each other. Remember, as we went on during the week, we had a couple of different scenarios where we had good news, we had bad news. So we started out having bad news, then good news, then bad news yesterday. And what we tried to do with it all is try to see if they apply to us in terms of weakness or strength, or should we believe in it? Should we not believe in it? What is the chart telling us? And for the beginning of the week, we did get that correctly going in. And for today, I'm seeing that there's not a lot. That's interesting. Unless you only took one portion of it. We didn't get a lot of news. The only thing that I heard possibly was that Spain still has quite a bit of not good things going on. So that's the only thing I really heard. Besides that, doesn't seem like there's a lot else that's going on that was significant. So anyway, so you can see right there where this overall area did reach up to the upper part of the zone, but you can see that prices, we'll go take a look at the charts too as well. All right. Now, the next question though is for people that, what would you say, what would be the reason that you didn't want to take it? Or what stopped you? Is it because prices were rallying back up at that time? Or you just felt like, well, it's an overnight area? Because what we came to the conclusion yesterday was it was bad news, but it was also a weak market. So you had the bad news mixed with the weak market, which is different from the other 2 days where we had the opposite feel of things, right? So Sam's asking, how do you stay close? Well, I get, see, for me, when I started trading, all the markets were very active. I mean, these days they're back to that again. But at one time, it was right before the overall, that whole 2008 happened. That's mainly when I started, and I really once I went beyond stocks, because I started with stocks, but once I went beyond stocks, I went into forex, futures and forex. So what I realized was, hey, I can start in Asia. You know, I can start in Asia. And you know, when you first start, you get all this, energy, and you're just like, I could be up 20 hours out of the 24 hours of the day. You know, I'm like that now anyway. But it was just that drive that you just like, I want to trade every session that I did. So for me, now it's not so much Asia, but I still get up for London and everything. So I'm pretty much listening to everything, looking at everything from that time on. So it can be anywhere from on East Coast time to 2 to 3 o'clock in the morning. So that's a lot of things you can soak in by the time the morning comes, and I try to see what's relevant as we come into it, right? So that brings me up to my next point here. There. Okay, so you can see here what's holding you back, right? Well, if you think about it, what's really holding you back when you're doing these trades? Is it is it the fear of trading losses that's holding you back, right? If you're going into it thinking that, hey, this is we're always going to be 100% here, and I'm in a profession where I'm always right. So it's very difficult, right? Because then you're thinking, well, I want to be right all the time, but then it doesn't work that way. And those of you that used to doing perhaps sports or whatever it may be know that winning is not every single day, right? Thank you. But to enjoy your profits, you have to master losing. So believe it or not, you really do have to. I know, like, when you first get started, and so say for instance you first get started and you have multiple losses, and all of a sudden you turn the corner and then you start, hey, I'm seeing some wins, I'm seeing some losses. Then you typically will level out there for a little while, and then all of a sudden you'll be seeing, all of a sudden you'll be seeing, well, something hit you, and then you get that nice little, start to slope up again in your trading curve, and then you're starting to feel really good, right? Then all of a sudden you're just like, oh, I finally got it. I finally understand. But then what happens a lot of times is you think you finally understand, and then you start not following your rules just because you just got it, and there you go again, and knocks you right back down again. So really understanding your risks is what has to be. So before you come into all this, you have to just say, hey, listen, I know that this is how much I'm risking on this trade. If I'm not okay with it, I'm not going to take the trade. But if I'm okay with it, I just got to accept it as, well, it can be a loss. So if I'm okay with that amount, if you're not going to be okay with it, you're not going to be okay with your trading, because that's just a part of it. And the other thing that why I feel like it's important too is people associate it with their like how much they make an hour. That's what I've noticed too. So they're saying, well, I want to risk 200 on this trade, but if I make $50 an hour, that's like 4 hours. So you can't really associate with that too, because when you're making money, it's a lot more than that. So don't associate it with, well, that's like 4 hours of work for me if I lose it. You just got to think of it in terms of what you normally would get with your risk to reward, not so much what you're actually physically doing day to day, right? So the other part is, if you allow the fear to limit yourself, you're creating the very conditions that you're trying to avoid, and that will likely fail. So fear is a big part of it too. Like I said before, how many times do a lot of you, if you're looking at levels and you're saying, well, this is perfect, this is great, but then by the time we get there, you say, well, maybe it's not so great. Maybe the trend has changed. Oh, well, and let me sit and think about it a little bit more. And of course something happens, the phone call ring, something, or you're cooking something and you go run, and or your dog needs to go out, And then before you know, you're like, oh, I missed a trade. So, these things, they happen, right? So you have to figure out, if you really figure out that risk, I do feel like you won't have the same problem. So don't fear failure. Fear being in the exact same place the next year as you are today. So what you always want to do with all of this is make sure, so everybody's timeline is going to be a little bit different. People always ask, is it going to be a year? Is it going to be 3 months? Is it going to be 4 years? Everybody's going to be different depending on you yourself, depending on how much time you have. But as long as you want to do it, you will do it. It's just a matter of time of when it takes. So what you always just want to do is make sure you're progressing, right? So meaning if you're in this spot today, next year you don't want to be in the same spot or even worse, right? You always want to make sure, well, by time next year, at least you progress some. So this way you're guaranteed that I'm moving ahead, and the speed at which you move ahead is depending on how much time you want to give. I mean, for me, I just went right into it in the very beginning and was just, full on for, whatever, 20 hours out of 24 hours. But that's a little bit nutty. But, some of you that's doing it, you probably understand. And then there's always a question of, well, why do you want to, why'd you just trade, and then always the issue is, after you've been so into it, and then a year goes by or so, and then you are, really getting it and trading, and then you're thinking, you know what, I'm just sitting here by myself. So it's always good to have a community, right? Very, very good to have a community so that you do get bored after a while, especially after you get it, because then you're just sitting there by yourself, and that's not the best thing to do forever either. But in the beginning, when you're learning, it's fine, but then you will realize that a community is much better. And also, the community sometimes will help you just to achieve your goals faster. It's very hard on your own. Trying on your own, you make a lot of mistakes, and you don't know why you're making the mistakes, right? So all good points to remember about this. All right, let's get into the charts. Okay. Yeah, correct. Right now is a perfect time to, this is a perfect time to put all your, trying to learn all your lessons right now, because this is, you're forced to in a way. All right, so with the S&P, now you can see what it looks like on the higher time frame. So I decided not to put new supplies inside of this overall range. The only thing that we are going to look at is because the gap is still going to, right? The gap is still going to be there, so we will still pay attention to this overall gap above at that 25.57 to 25.81, right? There is one area that I want to look at on the I'm going to go down to the 15-minute. Okay. Hang on. So wait, is there a problem? So everybody can see my charts and hear me? So yes, the gap supply is in the middle of that, and it is true. So the gap supply is going to be more or less right into there. So would I say it's high quality? No. If you want a really the fresh area, it is going to be the 60-minute zone above the gap and the 240-minute zone. So that I would say would be the fresh area. Anything inside here, yeah, you can just take a look, right? We've been back and forth, back and forth, back and forth, back and forth. Okay. Oh. Okay, I don't think it's something on our side, right? It maybe just be some. So is it really a problem then? Because if it is, that might be hard to. What do you think, support? You're listening too, so you let me know. I'll go on for a little bit, and then you guys tell me. So it just keeps. All right, all right. I'll keep going, and then we'll just take it from there. If it's really bad, yeah, okay. Okay, so I'll keep going. If I have to slow a little bit, we'll slow. Okay. We just have to let it catch up a little bit. Yeah. Okay, great. So let's take a look at what's this below this area. You can see right below this area, you can see a little bit better on the 10-minute. Looks to me like it just barely missed. You know, this area is 2383 to 2360. Okay, you can see we tried to touch it a few times. We couldn't quite, and we left it a few times in a pretty strong fashion. So this would be, if you take a look at it right now, this would be, hang on, below the overnight low at 24.48 and also below yesterday's low at 24.35. Okay, and you can see here it's not too surprising that we are having this situation at the moment. Remember when we're looking at our remember when we were looking at our 10-year. Everybody's running a little bit slower today. Wonder if it's my end. Okay. So remember when we were looking at our 10-year, it hasn't taken out supply up above that it's hit a few times, but it's definitely held into demand. And for, even though it's moving a lot slower, it's still reacting inversely to the stock market at the current moment. It is interesting, it still can't get through here, so if you really take a look at the overall area, it's starting to get higher up into it, but really has not taken. So now as we come into with the bigger reports coming out, especially with NFP, it'd be interesting if it's still sitting here. I think if I want to see if this continues to move higher beforehand and the stock market moves lower, then more than likely there's not a whole lot of other supply up above in the 10-year. In the 30-year there is, but not in the 10-year. Then that could suggest, you know, a further movement. But if it's still sitting here at NFP, that seems to me a little suspicious that, you know, it's not a fresh area. You can see we've been through it so many times already. 1, 2, just sitting up here right now. Quite some time already. All right, we'll move to the NASDAQ. All right, so this was the area. Okay, we were kind of sitting in here within our session. So you can see as it comes up, you know, people start to, you know, you start to change your mind, right? You start to change just everything about it. And you can see, but, and it didn't even, it just barely touched the actual distal. Remember too, right? Your entry anywhere around the proximal, but your stop always has to be above the distal. So you don't put the stop at the distal, right? That's not what you want to do, because if you have two levels there, you want to make sure your stop is above the distal, not right at the distal. And sometimes with this, especially now, you have micros, so you have the ability to try to take on a little bit more risk than you used to. Sometimes when you see, you have an area such as this right up above, right? And before, yeah, it would increase your risk a lot more, but you can just see, because you have these two levels on top of each other, and you have a base that's right, and that is more to ensure that, for those, very close little stop outs or so. Okay, now what's below current price is okay, so you can see here on the 240. I don't. You'd have to go back and take a look at. And now I'm moved a little bit away, but what I do know that these days, like I said, with the micros, sometimes even with the dailies, it's not that bad. Just because you can use according to what you want. If you just want to use, if it's a huge daily zone, you could take one micro, and before you'd just be like, oh, I can't take I can't take the daily zone. But now it's a huge daily zone. You can take one micro if you want. And if it's like a little better, 240 zone, like before you would say, oh my God, this NASDAQ, I can't take this zone. This is huge, but it worked out perfectly fine. I mean, last time, the other session we had, it was actually into, little 2 5-minute zones on top of each other as well. But you can see here, now, normally we would say, oh, well, there's no way I can try that. But with the micros, it makes life, a lot easier to take these larger zones. Underneath it, you can see it's an overnight area. That's why it's in a yellow circle, not a box. And you can see that 722 to 7110. So that's the one that's hasn't been touched. That's below current price right now. And again, all of these gaps in between, right? All of these gaps that we have above is like, what was pointed out earlier. They are in the middle of this overall range too as well. So you can see this 77.48, 78.29. And the main reason why you will even look at the gap is, well, the gap was formed for a reason. There has to be sellers saying that that's why prices were down. So, it's an area you can still watch even though it's in the middle of the overall range. And the demand zones are above this lower area below. Now, remember, too, when we were talking about with the, if you take a look at the cues here, right? Remember the cues we were saying that, okay, we have a gap down below. However, it just missed the 60-minute levels. So don't lose sight of that if prices start to move lower and go beyond the gap, that it's going to come into these two 60-minute areas. Whoops. Now, what could you do with this information? You could actually trade the cues if you want, or you can, if you're looking to buy, you can try to buy some NASDAQ stocks as well, right? So either way, if you want to use it as an extra odds enhancer or you actually want to trade it, like I said in the beginning, what usually happens is all you really know is stocks, because that's what the news tells you, especially if you watch CNBC. The focus is the majority of it is on stocks, and so you believe, well, that's what I need to trade. And of course, for your long-term positions, it's always great to get in a good stock. But if you're doing a little bit shorter-term trading, there's factors involved that sometimes you can't control, such as something that happens to the company, the CEO, earnings, all those type of things that come in. But if you can match it up as best as you can, the Nasdaq stocks with the Qs, the SPY or the DIA with some of the other bigger name, or the energy, say for instance, the energy sector and everything. Those, if you can try to really, if you know that we're coming into higher time frame demand in these markets, it'd be a good time for you to start looking at some decent stocks that you want to get, instead of trying to just focus on, right? I mean, that's all I did in the beginning was, oh, well, let me try to see which one moved the most during the day, right? Or what about the little ticker tape at the bottom, right? The ones that's flying, in every direction in the morning. That's the one I want to trade, because that's the one that's moving the most, and I want to trade that one today. And that's really not the way you should be doing it. That's a good way to get quick money and lose quick money, right? No, you like that because for a few reasons that, right? So so there was buying pressure in here, so that there's buyers sitting in here, and it missed the lower level. So you like that, because if you think about it, I mean, if we're not in fresh areas, it's different. So say, for instance, like we're in a sloppy little range and prices, get to the next demand level. It's not really a fresh area. No, of course it can go through it easily. But if it's an area it hasn't been to before, and because for the most part, what people first start to learn is, well, once you start to break, like if we go back to this picture here, right? Right, and we make this a little bigger. Right, take for instance this, right? Oh, in this scenario you had yesterday's low, so it's not really a fresh, truly fresh area that's below the overnight low. But a lot of times what people will say is, well, if you're going to break above the overnight high, right, you want to be a buyer. If you're going to break below the overnight low, you want to be a seller. So same thing when you're looking at, I mean, there's a reason why when people call, bear markets or things at certain time, because when prices start dipping and they start moving to new lows, and then all of a sudden they'll say, oh, this is the time that it's a bear market. Meanwhile, if there's a fresh demand underneath, or there's a fresh supply up above, now all of a sudden things look a lot different, right? So a lot of times what happens is, if we're moving below the overnight low and there's a fresh demand, well, that's a good thing for us, because those people are going to go short and we're going to try to go long, right? But if there's not a good area underneath, then if there's a supplier, you will continue to sell, But that's the same thing in that scenario, where if you break below the previous low, more than likely a lot of people are going to try to sell. And then you say, hey, I'm going to think like a banking institution, and I'm going to buy. But it has to be a reason to be a buy. You're not going to be a buy just because you think it's time to buy. You need a reason to be a buyer, is what it is. Okay. So let me just take a look at the SPY here, what it looks like. So the SPY, you can see the overall situation. So these candles are a little bit different colored, just because I wanted to see what it looked like in the post and pre-market too as well. And you can see right below current price, we have tested this lower zone a couple of times. So this is not your fresh zone, but it didn't get too deep into it. So if it gets down here, it wouldn't be one that you do it like a set forget, but you would watch it, especially if you're trying to take some sort of stocks too. You do want to see if it could try to base out here. This is the gap below, where this is basically coming off of the daily zone. Okay. Yeah. So the other indices are pretty much the same. There's not a whole lot difference. Yesterday I gave you the actual lower IWMs. The Russell came close to its 240 but didn't quite touch it yet at the 1040. So those areas we don't have a lot of differences coming into them, I believe. Okay, so we can move off of that for now. Let me move to, okay, so oil. Now remember we had this area, we said, well, this is going to be a gap, but it just hung around here, hung around here. One thing I did warn you that this was tested into that first overnight. So even though this looked like a gap up above, it wasn't going to be fresh, because if you remember, we said that this was an area that we went already higher than there. So that means if we did come in, fill this gap, it is not going to be a fresh gap, and it is likely to go higher, right? So we did base out here for quite some time. Okay. Yeah. Oh yeah. I mean, in terms of, that's the whole speculation right now. You know, things are leveling. I think things are leveling out, but you know, ultimately we just need to see we need to see it more. I feel like we need to see more of a timeline. You know, like we do need to see, you know, Spain level off and Italy starting to level off. So there's some good news, but then there's just a little bit of a missing piece of it. I mean, if you just get that little missing piece of it to start to turn around, I think that's what's really going to start to turn around. Right now, you have things holding up because you got the stimulus, you have you know, the small business lending, all these things that's coming out. So people are getting a little bit of a breather. So then they feel, okay, I can last out this month or so if it's going to be. But if we start going and we start not seeing, you know, improvements continue, and then we start to get into more hectic things, then that's going to create a little bit more havoc where then people are not going to be settled. But right now it's like a little bit calm, but not knowing just the exact timeline, which makes it a little bit difficult. But anyway, so you can see right now we rallied from this area. So this is the pit session, right? So this is the one that's going to open in 20 minutes or so. So this is the pit session. Prices pretty much bounce, closed into there. And now you can see we rallied all the way back up. And you can see there, went to hit our supply zone. So we had a couple on top of each other, and I said, with this one, if you wanted to take it, I mean, it's low down on the curve, but if you wanted to take it, we had all three of them, but you didn't have to, you would have to kind of watch it if you didn't want to take on that much risk, because you know that it is pretty low down on the curve. So you can see it went up to the second one and the third one. We had a nice little drop out into the first opposing demand right now, and we're still holding it at the current moment. Above here, there's not a whole lot of fresh areas, except for the higher 60 minutes way up above. To me, it just looked like what we have. So let's go to the other charts and we'll take a look. Let's go to CL. And remember too, today, CL did drive market somewhat. Right? It did drive market somewhat to the upside because crude had some strength coming in to this morning, had some decent news and did rally out. If I can get to that chart. So what I'm going to look at is could be on my side what's going on. Maybe less workers around. You know what I was saying? I was like thinking, oh, is everybody gonna, before this, everybody's like running, nonstop, and we got to get to here, we got to get to there, we got to get to here. Now people are like going, oh, I'm sleeping so much, and I'm trying to, I don't know what to do, and it's kind of like I'm like, oh, are we all gonna get like lazy? I'm wondering. I don't know why this isn't populating, but we can come back to it, I guess, for the most part. Yeah, looks like it's taken quite a bit of time. So let's take a look at a little bit onto. All right, let's see. I guess we'll come back to if there's anything else too interesting right now. Let's see what this is going on here. Okay, so it looks like gold is actually gapped up. So weakness inside of the equity. So what I'm seeing today is we are getting a little bit more safe haven plays coming in, right? So gold is actually gapped up. The bonds are actually a little bit strong. So we are seeing some safe haven plays come into play. The other market I believe I would want to look out for is let's go take a look. Let's go take a look at the yen. Oh, here we go. So now you have this area here. Okay. So you can see that this is 2118 to 2078, and it's in a yellow circle because this, if you take a look at it, this was made in the overnight. So it ended the day and then it went into the Asia session and then popped out during the European session. We're still holding those 5-minute zones right now. And this is coming off of that gap area, and then now you have this overnight 180-minute demand right now. Yeah, so typically what happens with a lot of these markets is when you're looking at it, so the stock market, when people are flocking to stocks, right, then you can see all the money is going in there. Just let me just try to buy as many stocks as I can. But when we have issues, right, then all of a sudden people's like, well, I gotta grab my money out of stocks. I gotta put it somewhere else, right? I don't want to just leave it in cash, even though sometimes that will be the safest way, that they'll wait for something, but they want to move it into something else. So they'll move it into bonds, they'll move it into the dollar, they'll move it into the yen, they'll move it into gold. And with that is, that's usually why they're your safe haven plays when people are moving their money out of stocks. But we have seen throughout this year that it has not always been the case that those are always the safe haven plays. You have the dollar come into play where people was really shooting the dollar up there and putting the money into dollars. But then you'll see something such as gold or the yen come down, right? Because the dollar is so bullish. So it's not always the case that those will. This is what you want to do with inverse correlations. You want to watch them. Like for right now, I do see that the bonds is being a bit inverse to it. Crude is, early on was helping the markets. So I do see some connections with some of these, but then what will happen, especially as we come into NFP, a lot of times that'll lose the connection again, right? That'll lose that inverseness. And what people like to do with that is it can try to formulate what you want to think for the day, or they'll use it actually if they want to take, like say for instance, if you wanted to take the long in the bonds at the 240, but you're not really sure, but you see supply in the equities, then you say, okay, that gives me a little extra reason to take the long in the bonds, right? So those extra things, or you say, well, bonds is at demand and I see equities at supply, so I can try to short you know, the equities. So something of that sort. Yeah, but it's not always perfect. Okay. Yeah. So USO is going to be. We can go take a look at that. Very similar to crude. And I believe, oh, before I switch, wait, let me. Okay. Is that good? I think if I give a little bit of a break in between, that might help if anybody's having an issue, catch up. Yeah. So remember too, we had these couple of areas on the 120 minute, right? Now, always put in your line, you know, especially because like this, right? You have to go back to, boy, this is like, this is '02. So anytime you have to like download that much data, what I typically like to do is when I go back is, this is just because I've done it before where I just like zoom past something and then I'm like, oh, that looks like a really perfect level. But meanwhile, I zoom past everything that it's hitting because I went so fast past it. So I try to, if I'm really have to go back far, I give it a line, but I just don't just make it you know, this is more for people who's like starting out. They got to really go back. And I try to make this really, first of all, like a really outstanding color. So if it, you know, if it's going to be a thing, I'll make it green, you know, or if it, maybe that's not bright enough, make it green. And then you want to make it like as thick as possible, right? And you can make it like less after. But see, this way, when you zoom back, at least you'll less likely miss. You won't miss like, oh, I missed this level going back and I went too far back. You know, things like that. So that's what I do if I know I have to go really far back just because I've zoomed past things before. Just a little, you know, thing for you to know. So this is the area that we've been bouncing off of. Okay, right now. And this is the monthly of it all, right? So you're going to have a very similar look on the USO. Do we see it yet? Maybe not yet. So let me just see it. So if I want to see what the price is right now, I'm going to go to properties. I'm going to do a 24-hour. Okay. So you can see we closed at the 437. We're up at the 464. So yeah, it's basing. It's moved up slightly. Let's see where it is in relation to it. So in this market, we haven't seen something really significant in terms of, it's kind of opening up right here, which is a little dangerous that it's not out of this yet. Let me just see if previously, because it looked like to me on the other market. Looks like it got, yeah, you can see this is really where that first gap is. This is where the second gap is. So it's below this. You know why? It's going to look like this whole area is just right in between nothing because this is overnight here. But it's definitely above this first one, which is going to be at the 448. Now it's going to be, so one good thing, it did take out the very first area. It didn't get through now the second one. But It does look like, so you should have the same. So you should have the same. Let me go to the 180. If you want to look at the same area, I would say it's right in there. Okay. Yeah, like that. Okay. All right. Now I said today I go over I'm going to leave. I mean, tomorrow we'll definitely do more Forex before the reports, the NFP the next day. It could get very quiet a lot of times, but since many things didn't hit yet, the only thing I'm seeing is that the looks like dollar demand kind of held, and that looks like all I'm seeing right now. Because remember too, if we're having equity weakness, dollar is going to gain strength, right? There is I believe a BP. Let me just see. Yeah, there is a 30-minute zone in, so you could take this down. That's in the pound dollar, 1.2029. And the reason why I still put demand in this market is because it does look like the stronger one out of the other currencies. So you see 1.1959. But I can see right now the dollar is gaining strength as the equity market is losing strength. So, and in the BP, it would be 1.2044, 1.1953. Okay. So remember with currencies, the reason why I made this little workspace, it's not a currencies is not going to be one like the others where there's, even though they say, you know, it opens and closes at certain times, yeah, but no, it's going to be like, this is just around the world like we talked about the other day, right? Starts with the Kiwi, goes into the Aussie, goes into the yen, moves to the British pound, moves to the Swissy and the euro. Then we move into the US sessions where the dollar is going to take precedence usually with the news reports. However, with this given situation with the stock market, you'll see you're going to get volatility overnight just because of that situation. Otherwise, mainly the dollar is going to move with the, you know, U.S. reports, and that's going to cause the biggest movements. But when we have such extraordinary situations, it has no problem in moving a lot overnight too as well. And you can see the peso and the Canadian dollar all more towards the U.S. times, right? So they don't have a particular .D type of session, but what they will do is a lot of times you'll have, you know, especially when we get back into normal conditions, you'll have lighter volumes inside the pound and the euro and the Swissy during this time, and then you'll have you know, a little bit lighter with these markets during this time. Then all of them will come together in the U.S. because if you have major news, it's going to affect all of the markets. Otherwise, if you don't, then, you know, these markets will be the ones that move more during the U.S. time, right? So it all depends, but it doesn't Forex is one market. It doesn't particularly have a, you know, this is a pit session time. Let's go into this where I wanted to cover. And you can see, so let's go take a look, couple of them. I did want to start with the Dow, since we don't really look at it a whole lot with it. And this list you can get in the, I believe it's Workspace 9 ETF. I just changed the charts, but the actual radars, well, whatever this is this screener thing, you could get in the Workspace 9 on the, if you know, just open up the file open workspace, and you'll see it's workspace 9 ETFs, and you can get this, which is nice because it breaks up the little bit of the sectors for you, and it has the stocks for you. So that is a nice thing to have, right? Okay. Oh, no, that's correct. Okay. Swissy and Euro is almost about the same time. Yeah, they're always going to be about the same time, right? If you take a look at a lot of their news, they're typically around the same time. The pound usually likes to open with the DAX. But anyway, let's go to the DAX, the DIA here. You can see on the monthly. We got these two areas on top of each other. So we bounce off very nicely off of the monthly on the first one. We have another monthly right below it. So just so you're aware of it, if prices, does come down a little bit deeper, we have another monthly right below it on the DIA. You can see right now with the weakness, we did try to gap up, and now we've come right back down again and even below the gap. So still some weakness this morning. Initially, we had strength because of crude oil, but now you can see we are coming right back down again. Let's go take a look. I want to go take a look at Amazon for a bit. Let's see. Oh, I just can type it in. Okay, to see we're at 19. Yeah, so it didn't move too much. You can see down below, we did pull back into it once, right? But you can see that we have 1721, 1680. We did form a little bit of a base here. We did have a pretty strong rally out of it. So, of course, it's far away, but if you, keep it on your radar, that's an area to watch out for if it gets back down there. Okay. So yes, fundamentals are going to drive your market. I mean, that's no doubt about it. If interest rates are going to be a certain place, bonds has to be a certain place. That's all. But like, if you see how we analyze this week, right? If you see how we try to come in and say, you know what, today was bad data, but I believe it's going to be a good day. Today was good data, but I believe it's going to be a bad day. Or today is bad data, but I believe it's going to be a bad day to go with the bad data. It drives the markets. However, you have to realize too, trading is a zero-sum game, right? So you're having people constantly try to kind of, win each other out. Basically, it's like when you're in a game or something, a sporting game or something. You're trying to out trick your opponent or something. So it's not necessarily that's exactly whatever the news is telling you. That's what's going to happen. A lot of times it's because they're telling you that now they're going to get, they know what the mass majority is going to do that, but eventually the fundamentals seep into the market, and that cannot be denied. But the footprints are going to be shown, and that's where the supply and demand levels come out. The footprints are going to be shown, your supply and demand levels come out, and that's where you're going to see those banks and institutions have the selling and the buying that's coming in, because those footprints are in your chart. So that is the importance of knowing your supply and demand as well as you can. It's not a complex strategy, but to master it, it can be a little bit more complex, and that's why you try to get every nugget you can so that you can try to master it. Because if you're missing a component of it, it will matter in your trading. You need every component of it to make every part of your entry, stop, target. You're thinking with all this come together, right? Okay, so let's go on, and I want to take a look at, let's go take a look actually at Apple. Okay, so Apple's come off of a daily demand. A weekly is still a little bit lower. You can see the weekly is still lower at the 209.40 to 200 in Apple. I believe it also has a 240. Well, maybe not. Thought there was. Let me just double check. I don't. No, actually it wouldn't be, because this would be the same as the daily. Yeah. So you can see this daily. I mean, this would be interesting to take again, because you can see it went down not quite halfway to the 214, 210 area. So if it does get back down there, it still looks like it would be an interesting place even before that weekly again to try on Apple again. You can see, because it did form a pretty strong candle that day out of it. Okay, I do want to take a look at, I was looking at a little bit energies today as well. And another thing as we go through this, so you can see, let me just see 39. So here on XOM, just because if you are looking for a little bit of a bottoming in the oil, it's just there's an area right there at 3503 to 3346 on the demand side. Okay. Another thing too, so once the day gets started, so you can see right here everything, you know, right, you can see this list here, and you can see where the sectors come in. What I like to do, if I'm going to do stocks more for a little shorter term, just to see like for the day, I'll take a look at what the, so say for instance you have the sectors first, right? So I'll see, you know, which one's red, which one's green. I'll see which sectors are doing well or doing good for the day, and then decide if I want to short or long that sector. But then I'll go into the stock, and what I'll do is I'll look at the stock, but I don't want to look for, so it'll have like a net percentage here. So I don't want to, if I'm going to pick a stock within a sector, so say for instance I see the sector is weak. Say I come in and I said, okay, well, or say for instance I say, oh, energy is going to be strong today, and I see a green in the XLE, right? Energy is going to be strong. So then I'll go in, I'll take a look at the stocks, and you know they'll more likely be green. They'll more likely have a percentage change. So then I'll go and take a look, and then I'll say, well, you know what? I don't want the highest percentage change because then that's going to already move the lot. That's not going to help me. And I don't want the one that's the weakest, right? So I don't want to do that either. So what I want to do is I want to look at something in between. Then when I go take a look at something in between, and I said, well, okay, that one looks like middle of the range, so it still has some room to run perhaps. So then from there, I'll go in and I'll take a look at it and see if I can find a quality supply and demand zone. So it still all comes back to your supply and demand, but you can use other things to try to lead you to which one can be perhaps better for you for the day. So that's when I want to, if I want to do a little bit of a, you know, shorter term trading on stocks, you know, I'll do that. And you could always go back in the recording, and I know sometimes I go a little bit fast with that, but and this is for the banks. So you can see on PNC on the weekly. So right below all of these lows, you do have this area of demand, you know, and so of course these are a little bit longer term, but you can definitely keep an eye on them. But this is 75.28, 72, 37. But the nice one about that is, you know, if people see it's going to break, you know how the news always says, oh, it broke below, let me just see this one. It broke below the 2014 lows here, and you know, yeah, now it's really bearish. Yeah, so that's what's good about looking at some of these. Okay. Okay, yeah. Like I said, you could just get into Workspace 9 in TradeStation, the actual watch list. All right. Well, that's it for today, and I will see all of you tomorrow. Have a great day.